Good morning. I'm here with Arnaud GAREL of CACEIS, one of the leading service providers to the private capital industry. You're going to talk to us a little bit about the trends you're seeing in the market?
Morning, David. I'm first of all delighted to be here in Paris for this IPEM. First of all, maybe a quick word about CACEIS. So indeed, as you said, CACEIS is a leading service provider to the private capital industry. We are one of the major players in Europe. We provide depository bank, fund administration, middle office services and financing to private equity, real estate, infrastructure and private debt clients. That's across Europe. And our majority shareholder is Crédit Agricole. Our business line has more than 545 billion of depository in assets, and we have a business line dedicated to this asset class with more than 750 people fully dedicated across Europe and in Malaysia. When talking about private markets, at the moment, I think everybody is probably going to have some comments about how challenging the environment is. We know that fundraising has been slowing down in the past year and a half. Certainly the very quick rise in interest rates and the slowdown of the economy has not helped. But we may be seeing some tiny bits of sun in this gloomy landscape. Why so? Well, first of all, because while everybody was expecting a recession in year 23, so far the recession has not happened. We may have one later down the line, but so far the economy is still demonstrating some growth. In addition to that, while interest rates are relatively high now, we are nearing 4% in the Eurozone, we see signs of this monetary tightening slowing down. I think that's what everybody needs in the current market, is having clarity and stabilization on the interest rates conditions for credit to be more available. Coming back to fundraising, if we take some figures, between 2018 and 2022, the annual pace of fundraising for private capital in Europe was around 250 billion euros annually. In this first semester of 23, there's been 97 billion euros raised. So while it's still a slowdown, if we annualize this pace, we are down only 20% from previous years, which indeed is a slowdown, but there is still dynamism in the market.
What are you doing as CACEIS to adapt to this environment and adapt the services you provide?
It's a good question, David. I would say for us, the main objective is to be able to serve all our clients, from the large blue chip asset manager down to the smaller players locally across Europe in each local market in Europe. Why so? Because we are strengthening our offering and are gaining scale. To do that, we have actually signed the acquisition of the RBC, Royal Bank of Canada, European activities in July this year. And we are working now towards the integration of that business. By integrating this business, we are gaining a lot of new teams, new collaborators, specialized teams within the business line that will be able, in our various markets, to deliver enhanced services and enhanced quality of service to our clients. We have also gained a very complementary client base. We are now serving, out of the top 20 players in each of the 4 main private capital asset class, we are serving 5 or 6 out of the top 20. So we are really a leading provider. We have clients from the US, from the UK, from all over continental Europe. And the game for us is really to be able to deliver our clients with a full range of services in each of these markets. And in addition, to cater for the new trends we see in the market.
What kind of topics do you see your clients having to deal with in this environment?
I would say there are 3 main topical issues at the moment in the current market. First is ESG. We've talked a lot about it in previous years, but now it's a must-have for private capital fund managers. 75% of any LP program has embedded ESG criteria in its investment strategy. So it's a must-have for any GP wishing to raise funds at the moment to have embedded ESG criteria in its policies. Second, I would say it's access to high net worth and retail markets. Now that a lot of large blue chip GPs have maxed out the institutional capital allocations, they are trying to address the savings of the Europeans, which represent currently 2 trillion euros, via new fund structures. So these funds can be qualified as hybrid funds. They have a mixture of liquid and illiquid assets and are open-ended very often. We are improving our capability, our operating capability to deliver services to such hybrid funds, because it's a very strong ask of our clients, whether they come from the US or Europe. And we are adapting our IT platforms and our tools. Today, I would say a lot of our strategic clients are looking into this new type of hybrid structures in order to take a relay of their more traditional institutional funds. And last one, I would say it's the diversification strategy for any GP. You see, as fundraising environment is challenged, a lot of our clients are diversifying, either starting new sector-focused, new strategies, or acquiring smaller GPs in order to diversify the stream of investment strategy that they have and they can offer to their LPs. I think at the moment we see a lot of movement of consolidation in the asset servicing market, but also in the LP and GP markets. And we are accompanying, as a service provider, a major service provider, all these trends all over Europe for our international clients.
Sounds like there's a lot of work for you.
Indeed.
Very good. Thank you, Arnaud.
Thank you very much, David.